Good afternoon, everyone. It is the afternoon of February the 10th, Friday afternoon, a beautiful day here in Angleton, Texas. Hope you guys are doing well and you're looking forward to something impressive for the weekend. There's two things that I want to talk with you about as far as events coming up for Oak Financial and make you aware of them and talk a little
We are
bit about them.
temporarily having some
And I want to
sound
spend just a
issues.
couple of minutes on
The sound will
some of the
resume
markets
shortly.
that we've been talking about before. You may have seen in either an email or one of my last people that come to see me that are 55 or 60 or 65 years old and they're ready to retire. And they have a lot of money in their 401k, maybe more than their house, the most expensive asset they have. And they really had no clue all of the years of putting money in what they had, and they have no clue when they bring it to me. So I'm working to teach people more about investing, about what is the stock market, what is the bond market, how should you understand them. The second thing I see is I'm teaching people, as I did in my first class, the value of compound interest. The return that you make on your money, we'll talk about that in a few minutes, divided into 72, and that's how many years it takes to double. That's why young people, 20, 25, 30 years of age, ought to start investing. And the 401k was something put together in 1981 to 1983 time period where companies were first able to do that. So we'll talk more about that in a minute. That's basically what I'm trying to do in these classes. I had some suggestions from some of the ladies that work in my marketing group that I do something that's Valentine related. So this coming Thursday night, which is February the 16th at 7 o'clock at the Lake Jackson Civic Center, I'm going to be doing something that we're going to call matrimony. We're going to talk about beneficiaries. We're going to talk about 401ks and pension plans. And basically, if you have a wife or a husband or a boyfriend or a girlfriend, or you're not married and you want to leave money to your children or someone else, exactly how you do that. In 30 years of being in this business, helping people retire and stay retired, I've seen just about every mistake that people can make. And I have seen these mistakes in some cases many, many times. That really is what I want to focus on in this class. So we're going to call it matrimony. You don't have to, have a spouse or significant other, but that's what I'm going to basically focus on. So that will be this coming Thursday evening, February the 16th at 7 o'clock at the Lake Jackson Civic Center. The second thing I want to talk about is on March 25th from 2 o'clock to 5 o'clock in West Columbia at the West Columbia American Legion Hall. We're going to have just a get-together that I would love for you to come, bring your children, grandchildren, great-grandchildren, and basically let's just, we're going to eat some barbecue, and there will be bouncy houses, and there will be all kinds of things going on. Bring friends that you would like for us to meet and them to meet us. So that's going to be March 25th from 2 to 5 p.m., so we would love to see you there. In both of these cases, you need to RSVP. So call the office here, the office number, which is 979-849-2700. That way we will have enough food for both events. We don't offer a meal at our Thursday night gatherings, but we do have cold cuts and fruits and vegetables, a few things like that, drinks. But it helps us to know what size room that we may need. The same thing will be true with ordering barbecue and other things. So please RSVP to Sequoia or Darcy or whoever might answer the phone. So now I want to talk a little bit about the markets. Just to leave you with that as we finish here in just a moment. All right, so I want to take a look at the markets. We have had an incredible January. If you can remember seeing something like this that I put out from First Trust, comes to us once a week, and it basically has an overview of all of the markets. The S&P 500 was down 18 to 19% in October. So from October to here, we have basically reversed about 75% of that loss. So the S&P 500 in the last 12 months is down just a tad over 6%. For the calendar year, it was down 18%. So I want you to look at that. Now, the thing that I've been talking with you about, and I'm going to finish up with in a moment, is even having a year this ugly, down 18%, what is the average 5-year return for the S&P 500? It is 10%. In my first seminar that I did, and I'm going to spend a few minutes recapping this in my next seminar, do you know that the S&P 500, it wasn't always called that, averaged 10% for the last 20 years, the last 40 years, and the last 80 years. Going all the way back to World War II in 1942, the S&P 500 for 80 years has averaged 10%. The NASDAQ, which is led largely by 6 stocks called the FANG stocks, they've changed names, but it used to be called Facebook, Apple, Amazon, Netflix, and Google, constituted a huge portion. Well, that a year ago, that was up in a tremendous way. It was down 32%, but you can see over a 5-year period, even with this tremendous down year, 32% negative, it has averaged 14% a year. Taking my rule of 72, divide 14 into 72, and you find that you will double your money in 5 years. The S&P 500 is divided into 2 segments, 250 stocks that are growth stocks, meaning they don't pay a dividend, 250 stocks that are value stocks. The growth stock would be the Apple, Microsoft, those kinds of things. The value stock would be much more like ExxonMobil and Merck and Pfizer that pay a pretty hefty dividend. So fundamentally, you can see the S&P 500 growth in the last 5 years has averaged close to 11. The value stocks around 9%. The greatest challenge that we all had this last year was something I mentioned to you I'd never seen before, and that is the bond market get hit the way it was hit. So I want you to look at this for just a moment. High yield corporate bonds were down as much as 14%. That's because the Federal Reserve raised interest rates 0.75% 4 months in a row. And this sent shockwaves throughout the entire investment bond world. And so now, as they are, these managers are selling off pieces and buying pieces, you can see now we're back to 22 lows. We were down 11, but we're down about 4% right now. So this was the primary reason why many of you said, oh, I got to get out of the stock market. The stocks are killing me. It was, in fact, the bond market, which we normally expect to basically work opposite the stock market 95% of the time. This last year was the first time in about 30 years where that 5% came into play, and they moved in tandem, the stock and bond market. But they are both equilibrating and looking much better. So I want to go back just very quickly to something I've shown you for quite a long time. This is 5 years to the day of the S&P 500 in black and the NASDAQ in the blue. So we go back to 5 years ago to the day. You can see this movement along here. This is COVID back in March of 2020. From this point in time, the government began printing money, something totaling now almost $7 trillion. And because of that, things exploded, especially technology stocks when people were at home, and things like Zoom that I'm talking with you today on, Peloton. But all of a sudden, the money began running out, and we had this pretty sizable sell-off, 34% on the NASDAQ, 19% on the S&P 500. And I heard more times than I want to remember people saying, it's the end of the world. We've never seen anything like this ever in our life. What we did was we moved right back to our 10% number. This is that 10% line that you can see how well it normally tracks because of money that got printed. We had this incredible run up. And what happens? This is roughly what quality companies will make, is about 10%. When you start seeing bottoms like this form, So this is October. I'm going to show you in just a moment. This is the bottom, virtually everybody believes, on September the 25th and a retest on October the 9th and 12th. It touched there for the first time in June. So bottom from there, and now we have headed up, and what you're seeing is we are right on top of this. That's fair market value, pretty much any way you take a look at it. Looking at this very quickly now, what I will show you is the S&P 500. Here is that bottom that you see. We've talked about this before. The bottom here is exactly the same place as this bottom and exactly the same place as this bottom. Not kind of the same, it's exactly the same. Now you start to see a move up. And the question is, when do you start seeing selling coming? Let's go back in. This is 6 months we're looking at. So I want you to take a look at, here was a peak here that's already been taken out, meaning that we have already hit twice here, and you see some selling pressure right here. So now we're going back to all the way back to, in this time period, about August of last year. And what you're seeing is we're seeing a little bit of selling right here, but we're a long way from this bottom process. We were down 18% here. We're down now about 6 to 6.5% here. So what I would tell you is the market is doing what the market does. And the thing that I stressed from time to time in videos, I've talked about it also in the class that I'm teaching, and that is the market performance is not under question. The only thing under question is your performance. Why do we do a 60-40 stock bond portfolio or a 50-50? Because some people can't handle the volatility. It scares them to death. And so instead of getting a 10% return, we're going to make a 7 or 8% and make a smoother ride. This is like a roller coaster. So you can, by doing that, normally you can ride on the kiddie roller coaster instead of the big boy roller coaster. So what I would say to you is, I have been in this business 30 years. And in a time like this, it's brutal on you as investors. It's equally or maybe more brutal on us as advisors. When you're sitting in your office and you're getting phone call after phone call after phone call for 12 to 14 months now of people scared to death, most financial advisors are hiding under their desk. They are not out making phone calls and visiting with people. We're trying to do exactly the opposite. That's why I'm doing these videos. That's why I'm having Amy Coulter call a number of you. That's why Shelby and Jeremy are on the phone, and Ted and Nolan. It's why we're doing these seminars. It's also why in March we're going to be doing the get-together that I talked about in West Columbia. Is we're available. We want you to understand what's taking place. For people who have retired and they're scared to death, they're running out of money, and they say, get me out. Just understand that if we move from a 7 to 8% return to a 2 to 3% return, you're not going to have the retirement that you want to have. So it's my job and the job of other people here to explain to you what's happening, to pull the curtain back so you better understand what's taking place. And I can just tell you the bottoming process here, when it happens like this, and it does over and over and over, is when big institutional money is coming into the market. And you can see that in all kinds of places as you look across here at this place and how many times that hits. So I hope that's of some benefit to you. So after this coming Thursday, the seminars will be the fourth Thursday of every month at the Lake Jackson Rec Center at 7 o'clock. I would like for you to call the office here in RSVP so we know the size of the room and the food. And we would love to see you on March 25th from 2 to 5 p.m. at the West Columbia Civic Center. God bless you and have a good weekend.